Am I switched on? I'm switched on. This is one of those things that was going to happen, and it's been going to happen for quite some time, is that I got quite bored with people asking me, who is Tom Albanese? And so I thought that we should share it with you. I mean, to me, he was a young mining engineer from bloody Alaska, wasn't it? Who went global, and that's just totally inconceivable to me. I mean, Americans tend to be parochial, but Tom went global. And, you know, I came across him at Rio Tinto, which was quite a challenge, and then he decided to get into bed with the Indians, which was a hell of a challenge, and then a very dear couple of friends of mine from the 80s, David Harquil and Pierre Lassonde, hired him for Franco. So, I mean, quite frankly, the accolade you get from being on the board of Franco-Nevada, a $15 billion corporation. But there again, of course, Tom was actually in charge of much bigger corporations in mining. But Tom, I mean, who are you?
I'm a mining nerd. That's how I like to self-describe myself.
But you're global.
I've been global. I probably up until about the mid-90s, I was focusing on domestic projects in the U.S. I spent 14 years in Alaska. I went there at the age of 17 from New Jersey to go backpacking and mountain climbing, and that got me into mining sort of on the back end of it, and started working for a small private company that got taken over by another company, and then ultimately they got taken over. Then they got taken over by Rio Tinto, and I just hung on, and that gave me sort of into Rio Tinto. I went back up to Alaska for Greens Creek. They just shut it down. I'm very proud of the fact we got it back up and running, and Hecla's still running with it well. And then I just started going overseas.
Then you went to Mongolia, and you got involved with Rio Tinto and Friedland in Mongolia. Now, not a lot of people have had that experience.
It's a small world. I've known Robert since the 80s. And in his early days, very early days of the mining, I was in my very early days of the mining, and there were a few companies that were sniffing around Robert's early success in Mongolia, and we were successful in negotiating an entry in there, and that's been, you know, it is, except for maybe his project in the DRC, it's probably one of the best emerging copper projects in the world.
It's one of the biggest projects in the world in the last 10 years.
With the precious metal credit, no question.
But when you think about it, I mean, Americans by nature tend not to be global. I mean, it's Australians or Canadians or Europeans that tend to be global. But
in the mining sector, yes.
What was it that drove you? Was it intellectual curiosity, or did people keep on hiring you?
Yeah, I think it was both a combination of both. The opportunities came around, but I've always liked to travel. I've always been interested in all parts of the world. I think even when I was, 6 or 7 years old, when I was first getting my glasses, I had sort of one of these encyclopedias of places around the world. And so I just was interested in seeing the world.
Well, what was it that made you a mining nerd? And what is a mining nerd?
Well,
is it someone that reads Mining Journal?
Yes, it is. But I like technology. I have long felt that the mining sector was slow off the mark on adapting new technology. The mining industry has always been very good at scaling up. The same equipment, just keep making it bigger and bigger and bigger. But I think what happened about 10, 15 years ago is that it got the limits of scale. And then you saw sort of a dropping off of what I call performance improvement. The next generation has to be taking that scale of equipment and throwing on some more modern aspects of technology. And whether it's heavy mobile equipment that's automated, whether it's now continuous monitoring, whether it's big data, whether it is basically the same types of technology and processing, whether it is more remote activities, moving off terrestrial mining, these are all the type of things that really interest me because I see other industries basically embracing this stuff. They're proud to embrace it, but we as miners say, well, we want to be a fast follower in innovation. And I think that really what we need is, as miners, we have to actually be in the forefront of this because we've heard, whether it's ESG issues, whether it's license to operate issues, we have to be less intrusive on the landscape. We have to be less intrusive on our activities if we're going to continue to provide society with the metals, the energy products that it actually demands.
Well, that's very nicely put, but the fact of the matter is that the mining industry is a laggard, it's poorly managed, it's anachronistic, It needs to have leaders that have got the confidence to put aside the bureaucrats and the regulators and the accountants that slow them down. Otherwise, how the hell are we going to replace the reserves that are being depleted?
I completely agree. I was actually pleased over the past 2 days seeing some of the presentations, seeing some of the projects in terms of finding ways to bring in new reserves. But the fact of the matter is, when the oil industry went into the mining sector in the mid-'70s, they basically threw a burst of new exploration monies and also research monies into the sector, and that basically created the porphyry deposits in the Andes and a whole generation of deposits that we've been living off that capital really since the 1970s.
Well,
That's drying up. So we actually need to replace the Escondidas, we need to replace these big ticket deposits that were actually discovered by the oil industry back in the 70s and 80s.
Right, so what's changed apart from the fact that we're not making the discoveries because we're not investing enough in exploration? So what has to be changed?
Well, there's two things, and one theme I really appreciated was the opening remarks yesterday, is that during that whole period, the world was opening up. It was becoming
40
global.
years.
So you basically had the benefit of explorers could pretty much go almost anywhere. And they didn't have what I'd call jurisdictional restrictions. Just find the copper, find the iron ore, find the metals, and the markets will come to it, the technology, the mines will come to it. And it's going to be even more difficult now because if we get into a world of different zones, some parts of the world are going to be harder to invest in. The jurisdictional risk pricing, which I believe is mispriced between OECD and emerging markets, is going to increase. It's going to put less capital in those emerging markets where some of the new deposits are, and some of the license to operate issues that naturally are a problem in OECD issues are going to be more of a problem. So that's going to put a double burden on us in the mining industry to find that next set of resources while the big copper deposits and the other big deposits from the 80s are beginning to naturally deplete.
The mining industry. Are you talking about the Europeans? Are you talking about global? Are you talking about Americans?
I would not limit it to Americans. I would not limit it to Europeans, Canadians, Australia. In Vedanta, we had 15,000 engineers in one company.
What?
15,000 engineers in Vedanta.
How many
The average age, they had engineering degrees. They weren't all what I call, they were probably 3-year type engineering program, but 15,000 of them. And we had them running pot lines. We had them tapping copper. These were people that average age would have been in early 30s. Average engineer in Australia, early 50s. So this is a generation coming in that they're literate, they're savvy, they are always thinking about what can they do better.
How are they managed? I mean, you got Franco with 35 people, 15 billion cap, 380 projects. You're telling me that Vedanta had 15,000 engineers before you discuss the compliance officers and the regulators. I mean...
That's where the world's going. In some of these emerging markets, they're going to come up with technologies. We were putting big data into some of our sites when the consulting firms were saying, well, we'll do a study on big data somewhere else. So these are basically innovations that are taking place in what we would think as sort of the developing nations, that they're actually going to be potential leaders in the mining sector in the future. Now they're going to have to lift their game. They're going to have to lift their game to meet society's requirements and everything else.
But it's already happened. I mean, effectively, we are zonal now, and we thinking in the tradition of the mining industry, which is essentially American, Australian, Canadian, British, European, it's not anymore. The action, you talk I can't believe that figure, 15,000 engineers at Vedanta. There are 50,000 geologists graduating every year in China. And the zones have already happened.
Yep.
And how are we going to be able to compete with the Chinese with the Belt and Road Initiative and the capital that they're investing in Eurasia? And where is this going to end? Because we don't want to go back into a world where we have standoffs like in the Cold War, do we?
But we might.
Right.
So that means that what we have to do is we have to basically do the best job we can on the things we can control, which is put the best technology into place in the resources that we as an industry discover. Some of the resources are are sort of the tip of the iceberg right now. So as an explorer, you've got to expand upon those. You've got to look at the next technology. Some of these are going to need completely new types of underground mining for this to take place. We need the next generation to be creative about this type of thinking. And it's got to be done in a way which actually earns and re-earns that license to operate.
I agree with that, but I think that the Chinese are far more committed and they're far more focused than the Western companies. I wanted to take
I wouldn't give up on the challenge.
No, but I mean, it's instructive that you've taken a commitment to develop a project in a tier 1 jurisdiction where you can fly there in an hour rather than go around the world being responsible for
You can drive there in an hour.
Yeah, right, but I mean, that's what you're doing. You're delivering Nevada copper.
Okay, so 4 years in India, came back to the US as much because I had spent 20 years overseas and I had a need to re-domicile back to the US.
And the wife said it was time to come back.
My wife says time to come back, and I moved back actually near where I grew up, and my mom's still there in the family, so it's all as much family as anything else. But I said, okay, where do I want to pick the next spot? I like copper. I like the US in terms of a jurisdiction that actually is becoming more friendly for development, and certainly a double friendly jurisdiction within the US would be Nevada. Now Nevada has been, everyone knows Nevada for gold, but people really didn't focus on Nevada for copper. There's been two camps.
They are now.
They are now, and so I think that's a good thing. So it made a lot of sense. It was permitted, it was in Nevada, it was copper. So it sounds like fun.
Okay, so things that you haven't achieved yet, you've done things on a big scale. What are you doing that's different this time?
So where can technology take us? We're going to increasingly see that the equipment's going to be automated. We're going to increasingly see that as you get automated equipment, you can actually move into less or more hostile environments in terms of can't put people there. So then where are the resources? And one of the things I've been involved with would be deep sea mining. And I'm involved with a private group, and we're looking at nodules. We're looking at nodules in the South Pacific that are running 15% manganese, and they're running 15% iron, and a little bit of copper, a little nickel, and all that stuff, but a 0.5% cobalt. And I presented at the Cobalt Institute.
I'm sure Robert Friedland would be delighted to find that you found cobalt under the sea compared to in DRC.
I spoke right after the former Congolese Minister of Mining. And he talked about, hey, it's okay, cobalt, 80% of the world's cobalt's in Congo. Don't worry, we'll be okay here.
Hang on, which jurisdiction is it in under the ocean?
There are a couple different types of jurisdictions in the ocean. There are exclusive economic zones, which are in the 300-mile boundary. Mm-hmm. And there's also basically the Law of the Sea Convention, which virtually every country except the US signed up back in the 1970s. So this is going to be technology. It's 5 kilometers down. There's no shortage of resource.
Which jurisdiction?
It will be a sovereign nation, a Commonwealth sovereign nation.
You mean like a series of islands?
Island nation, yeah.
So what happens if you get a confrontation between America and China, and you got your boys under the water?
There won't be any boys under the water or girls under the water.
It's all automated.
It's all going to be automated. These ships can run with maybe a crew of 30 in a ship, and then everything else is robotic.
Something you said last night that kind of freaked me out. I don't know whether it was the wine or what.
Maybe the cigar.
The cigar. I was asking him what he was concerned about that, couldn't control. And he comes up with something that caused me to spill the wine. He said, a confrontation between America and China over boundaries in the water. And I thought, my goodness, I thought that we'd gone beyond.
I hope so.
I thought we'd gone beyond confrontations.
I've been in China over 50 times. I've had many friends, long-standing present friends in China. My own view is that the US, Europe, and China need to work together. There should be collaborative corporate relationships. There should be collaborative investments.
Oh, hang on. What's the Chinese view on this?
I think that many people in China have that same view.
I thought the Chinese wanted to work with Russia against America and Europe.
It
I
depends.
thought there were
It
zones.
depends on what newspaper you read.
I'm not taking this from a newspaper.
So my own view is that if you have closer links, you're going to have less risk of friction that can't be controlled. And there's obviously going to be trade disputes. I mean, a year ago, we were here in this setting, and we were saying, oh, there's noise about a trade dispute, and it's having an effect on copper. We said, oh, it's a bluff. Trump's got another bluff here. He's going to pull the cards right before the end. And that's a year later, and we're actually even more worried about that. So, these things can get quite serious. And I pray that basically the countries can work together, can find collaborative relationships that can actually work on things together. I've certainly found from a Rio Tinto and a Vedanta perspective, we partnered with Chinese companies. We partnered with big SOEs. It is very doable, and the personal relationships are a big part of that partnership. So these are all things that can happen, and they should happen, and we, as an industry, should be encouraging that to happen.
But it's happening a lot less because of the Belt and Road initiatives. It's not Chinese working with Western companies, it's Chinese working with companies right along Russia and through Eurasia. There's nothing European in this. This is an opportunity which the Chinese have seized, and the Western companies have just basically sat back and let it happen. What's happening in Africa today? Who's investing the money? It's not Rio Tinto investing the money in Africa. How many Chinese deals have there been in Africa? How many railways have they built? They're putting in the infrastructure in Eurasia, in Africa, to deliver copper to themselves.
So do you give up? No.
Well,
Don't give up.
how
You try to
do
find
you-
a solution that actually works, because we've found, whether it's the Europeans 100 years ago, the Americans over the last century, the Chinese will find, probably on accelerated, there's limits to expansion on that basis. It does create tensions, and you find that you have to start solving problems. And in the course of solving problems, I think we can find collaborative opportunities to work together.
But you need about 100 Nevada coppers to compensate for what you're giving away in Africa.
Well, Nevada copper is a good start. So we'll work on it, and we will basically get an underground mine for as little capital as we need, then we'll build an open pit, and then we'll hopefully find some more, and then we'll do something else.
Okay, so let's get back to what's wrong with the industry and where's the leadership coming, because opinion formers like you or Bert Koth or Rick Rule, they're thin on the ground, and it's important that you have an audience that you tell them. But what I think that we're lacking as an industry is we're lacking the objectivity and the intelligence overview as to approaching projects. And I was seriously impressed with Chris Kahn putting up his flow sheet on the wall as to what the industry should be doing to evaluate projects. Now, if the industry was following such a logical set of precepts to analyse projects, there'd be an awful lot more projects being put together.
I think the one thing that I've seen over the past 5 years, and I really embrace it, is that we can't rely on spreadsheets and basically financial experts to tell us to build the biggest mine in the world right off the bat. We've actually, and I think this is what we've certainly been doing in Nevada Copper, and we had to reset it a year ago to do this. We're seeing a lot of other projects. I was impressed with some of them I saw here, where they're actually going back to the drawing board and say, what's the smallest project to start? And let's get some returns on the table, and let's reinvest that and make it grow. Because Escondida, the Pilbara, these great mines of today did not start that size. They actually started at a relatively modest scale. If you look at the Pilbara back in the 60s, and there are movies on it, they were basically, it was a cottage industry. But it got people on the ground, it got the development going, it got some drill holes going, people began to develop the expertise, they found more, and then the story continued. And we have to just do the same type of thing. And by the way, you can go into tough countries on a starter scale like that, not put too much risk on the table. The investors here in the audience will say, I can punt for 200 million, don't ask for 2 billion. And these are the type of things we in the industry have to do more of. That will actually improve, I think, that risk-reward balance. It will improve what has been an asymmetric curve on risk-rewards in the wrong way. We need to make it so that there's very little of that curve on the downside and more opportunities on the upside.
Yeah, you almost dialed up an argument. I mean, one of the first jobs I had in my life was working on the Hammersley project. And you know what it was with Australia and the iron ore? It was the customers with their offtake agreements that made it happen. What's happening in Africa today? It's the Chinese organising their own supply of copper. So here we are. We have a conference, we have very exciting stuff about battery metals. So you need the copper projects, you need the nickel projects, you need the cobalt projects.
At some point in time, policymakers in the US and in Europe will realize that is it good for the battery supply chain to be dominated by China?
Of course not.
No, that question is not being asked yet. But at some point they're going to wake up and say, maybe that's not a good thing. Because if we're going to basically have a future OPEC squared, it's going to be actually a tougher OPEC squared than we're dealing with today. So it does require the US, Europeans to actually embrace mega battery plants and battery material refining in basically other countries. It's no different than energy. You have to have diversified supply. You can't have all your eggs in one basket.
Well, that's tough for the Chinese when they got 90% of the world's rare earth minerals, and where, as Gerard Reed said in his second keynote presentation, 99% of the electric buses today are Chinese. I would say China has got a flying start as regards to technology.
Maybe we'll copy their blueprints and make our own.
But if you're going to be operating in zones and you don't have some objective overview to how to invest and what to invest in.
An electric bus can be just as much of a commodity as anything else. A cobalt refining facility or a lithium refining facility can be just as much of a zone as, or just as much of a commodity as anything else. These are technologies that can be replicated. There has to be a will for that. Rare earths, we saw yesterday, you can substitute rare earths, outer products in windmills by actually putting more copper in it. So there are solutions to that. I think we'll have to be, there's going to have to be a little more adaptation in terms of the permitting requirements to get these through and how do you guys store the facilities, and probably new technologies to encapsulate the radionuclides from the refining, because you're not going to be able to sort of have the same type of tailings situations in the US and Europe that they would currently have in China. By the way, these deep sea minerals are actually rich in rare earths too. So we'll find some other rare earths if the market actually dictates that that needs to happen.
Well, at least the Chinese won't be building a railway to access them, will they? But we've got to get back to what these conferences are about, because I've had pretty much a lifetime of attending or speaking at mining events, and I've got to say that some of the experiences have been derisory in that the mining industry actually doesn't work globally, it works regionally, and the newsletter writers and some of the other conference organisers don't seem to have the disciplines that you need. And this is something that Tom's actually been quite important about. You know, if you're going to have an audience, you've got to have a quality audience, you've got to have quality companies. You go to PDAC or you go to, a traditional Mines and Money one, I mean, anybody can get in, and you're wasting your time, and there's 100 consultants to every
So the
mining
big conferences give you scale, which means a lot of people that you have a chance to meet, you can see a wide variety of companies. But what I think that the Mining Journal Select has done, it actually looks for the benefits of what I'd call a more intimate interaction between investors and companies that is not in a group of 10,000. It's not sort of in walls and walls and walls of people or 50 different companies to choose from. There's some self-selecting of companies. I think the project handbook, by the way, was an excellent idea as a segue into this. So you can actually go through that and you can see how these companies rank on different resource investment jurisdictions, et cetera. And the investors that are attending, I think, get a much richer experience from it. That's been my perception.
No, I think that's exactly right, because it's only at this conference, this Mining Journal Select conference or the Future of Mining conferences, where you have a restricted audience that have to qualify. What we saw last night was a leader in the world of battery metals sitting with a leader in royalties, sitting with the best performing private equity manager presided over by Tom. But I mean, to have these people at one table is quite spectacular.
It helps to have a cigar and some whiskey too.
And the cigars, but I mean, it's quite spectacular because they're not bullshitting. They're actually saying how things are to each other, and they all come from different standpoints. And if you can actually bring this to bear so that people can work together rather than opposition, I am concerned still about the, shall we say, the mishaps within the mining industry, the mistakes. And the media spends its time talking about the mistakes. Yeah. The media doesn't spend its time talking about the successes. And what are the successes? Yeah, you know, Mongolia was a huge success. You know, we have a decent-sized success in Ecuador, but we haven't had anything significant happening in 10 years to replace resources. So what's going to happen that technology can condense the time frame from 15 to 20 years to production down to 5 to 6 years?
I think from an investor perspective, the dearth of exploration success, the zones as they make it more difficult to invest in certain locations, the deeper nature of some of these future resources, the increased difficulty of getting that license to operate and permit, and everything else will mean that the supply shock that happens when demand goes up and then everyone sort of throws supply in at the same time, that's probably a lesser of a risk in the next 10 years than it was over the past 10 years. So that may actually create an environment of higher prices for a longer period of time. Now that can't happen forever before someone figures out some way of actually finding sort of big new supply and coming into the market, but it's going to be harder this time around for that to happen.
Yeah, but there's a difference, and the difference is that there's a number of projects and different metal prices historically were built. I mean, you've got Prieska in South Africa being re-engineered. I mean, that's very low cost compared to the hundreds of millions that you need for a new project. You got this remarkable project in Hungary that no one's talking about yet, where you've got involved simply because the copper's there and it hasn't happened. Yeah. But I think we've actually said enough.
So as an industry, you've got to be a bit of an optimist, and you've got to actually have some faith that actually humans will continue to consume metals. Yeah. And there's a huge, for everyone in this room, there's 2.5 billion others that actually don't enjoy all of the material things that we enjoy, but they have the aspirations to do so. So it's going to create a huge demand pull. It's going to be harder to get that supply in place. So you're going to have probably a period of higher prices. We should be putting more innovation in it. We should do a better job of ESG. And hopefully that gives a more rewarding investor experience.
Right, so it's the power of positive thinking. So I'm going to wind up by something that I could have brought in before, but it amuses me. Who was the last mine engineer that came out of America that went truly global? It was Herbert Hoover, who became president of the USA. And that was 100 years ago, right?
And he was the founder of the CRA.
And he was a very important early person with the Mining Journal. Yeah. So, I mean, 100 years ago it was relevant. Today it's relevant. But in terms of providing some form of objectivity and some way in which people can be brought together thinking the same way, not nerds, but people, 15,000 engineers and 50,000 geologists, but there's 1.8 million people that see what Mining Journal does. Nothing competes with that in terms of global conferences, in terms of leading on the future of mining and bringing people together to make it happen. You know, I'm a great supporter of Mining Journal and Alex Kent and what we've achieved. So I think I've said my bit, and I get a coffee for that, do I, Alex?
So you get a coffee for that, and maybe another invite back.
Yeah. Okay.
So maybe I want to close. You could keep sitting down if you want.
Okay.
And I want to just talk about my own reflections and sort of my thoughts about what I saw from some of the presentations. And before I do that, I'll try to move fast because we are closing. I want to just remind you of, I'm just writing this down today, the themes of my reflections from last year. And the first theme I had given last year was on an optimistic note, that China, which 5 years ago people were worrying, is it going to be a fast slowdown or basically a managed slowdown? And what has actually happened in China over the past 5 years was actually better than the best case of, frankly, 2011, 2012. And that's important for us because, as we saw yesterday, China still consumes half of most of what the metals industry does produce. So, what we have is that the Chinese demand has been better than the best case post the financial crisis. That's good news. On the bad news side is that resource nationalism is worse and getting worser. And it's actually, if you compare it with what people were saying 5 years ago, it's actually getting toward the worst case on resource nationalism. So that needed to put people on guard for what that all meant. And then we began to say, okay, so what is, even with all this, where are we going with e-vehicles? What's the theme on e-vehicles? What does it mean for the sector? We're just trying to get our hands around it at that point in time. And we were also talking about ESG and the fact that if you get ESG wrong, bad things can happen. So where are we now on reflections now? And I actually thought about this, and I start off with the first two presentations we had yesterday. First, E.B. Tucker, which we had this theme talking about here, is this opening presentation, which is a fairly dark world that he was painting, that after 40 years of globalization, we're moving toward 40, potentially multiple decades of zones of influence, which actually means it's going to be more difficult for the free flow of low cost of capital money into every jurisdiction. So that's going to have an effect on how people actually put money into things. I think what it will do, and I think your project book, it would probably increase the risks of jurisdictions if you get that wrong. So I think that my own input was that probably jurisdictions is more than that 20% weighting in that type of world, so it's worth reflecting on. On the good news side of all that is that gold as a currency probably becomes more valuable, because in that multiple zone world, actually you don't have dominant currencies anymore. So you probably have a little more confusion in the currency market. So if you're looking for what is a stable source of currency, you're probably going to see more central bank buying of gold. And that's probably good for the gold side of our sector, just from a demand perspective. If you're an investor in the wrong zone, we had a good discussion today. I thought it was before you make an investment, plan your exit. And I think in this world of different zones of influence, it may be harder to exit in some jurisdictions if things go wrong. So that's why, again, I would say that you'll see places like Nevada, places like Spain, some of these jurisdictions that are within a zone that is favoring free flow of money are going to actually be a lot more valuable vis-a-vis the other projects. I think it's just worth thinking about.
I agree.
Then I think the next presentation after that was Gerald Reed's presentation on the e-vehicle revolution and the replacements of hydrocarbons with electricity. Huge, profound changes in our sector. They're going to be big winners and they're going to be big losers. Some of them are obvious. I mean, we heard that thermal coal is probably
Finished.
A big loser. But we heard today that it's not been appreciated, but coking coal may be a big winner because renewables are actually more steel intensive than conventional power plants. So where are you going to get all the steel? And you're going to need more coking coal for it. So that's the one you wouldn't sort of top of mind say that's a winner, but it's going to be a particular winner. Obviously the battery metals, copper are going to be big winners, but there can be other metals, aluminum, you saw that in vehicles because you're going to have heavier batteries, so you need to have lighter frames. These are all going to be the type of things that need to be thinking about. But I think right now, what we saw were hockey sticks. All these statistics and graphs. I think we saw some good comments about at some point recycling is going to kick in, it's going to level off. But we haven't actually put it into what I'd call images. And I think as an industry, we have to be thinking about what the images are from that. So rather than just thinking about the statistics of percentage growth of lithium, cobalt, I was reflecting on coming to this conference. I parked my car in the Newark Airport car garage park, multi-level car park. It's about 6 stories high. You go into the car park, there is one row of e-vehicle parking places with basically cables on basically 6 floors. That's current demand of lithium, that's current demand of cobalt, leads you to one row on a six-story car park. 10 years from now, you might have 2 floors of basically e-locations. And you might have the 3rd floor, they're busy putting in all the wiring and the copper and everything else for that to happen. And then you take that type of increase in demand and you multiply it by a couple million because that's going to be replicated all over the world. These are big, big changes that are going to confront us, and we're actually probably not going to appreciate the nature of that change until we actually look back and say, wow, it's like that picture we saw of the, New York with all of the horses versus New York with one horse. So I think think about visualizing in your mind what that world will look like and what will be the consequences to the demand of different type of products. Statistics aren't going to just be enough. Questions for miners and investors in that case. What are the winners? What are the losers? I thought the met coal discussion was really interesting because I wouldn't have thought on the fact of it that any coal product would actually be a winner in that world. But of course, if met coal gets too scarce, someone's going to figure a way of basically co-firing with natural gas and everything else into that power plant. So remember, technology will actually have an effect on that. Over the past 12 months, the whole ESG environment has been thrown upside down with some horrible tragedies. And it's actually shown that companies that, even if were seen to be invulnerable, or basically a company that would be with stature that will never be impacted, can be seriously damaged if they get ESG wrong. So what that means is that this whole area of portfolio management, or ESG, I think, in my opinion, has taken on a more order of magnitude greater importance this year compared to the topic we had last year. Because you can see the damage that can do and the consequential effects it can do elsewhere in the industry. Unfortunately, the ESG discussion, it gets very complex. It is about basically meeting the questionnaires of a whole different range of stakeholders. We as an industry have to do a better job of better articulating what proper ESG means for us as an industry, what we should expect from each other, and we have to pitch that to the investors, and the investors have to have their own way of basically, first of all, believing it, and second of all, managing it, tracking it, asking us as miners the right questions. There will be very much a convergence of themes between ESG and license to operate and resource nationalism, and also with the different economic zones. Because if somebody wants to kick someone out of a country, it's easier to do it on basically ESG records. So these zones are going to be
or corruption
conversion,
charges,
whatever it is. As I think Nick said today, just the process of a new project gaining the license to operate is going to be more difficult. The barrier of entry is going to be higher. That's probably going to have a positive effect on price formation. So I think that resource nationalism turning into what I'd call more of a geopolitical discussion is something that came out of the conference for me today. The true consequences of both the EV electrification world and also the pressures on social license to operate are much more profound this year than they were next year. And I think that as an industry, we have to take these themes forward, and it actually should cause people to think differently about their investment portfolios and where they make the mining decisions.
Yeah, but you've also got rising metal prices coming up because you haven't invested enough over the last 20 years. And it's just no good when you've got committees in these companies that can kill a project on something which is not properly specified. And also, how do you have a set of rules that cover everything? I mean, this is what bureaucrats want. They want boxes to tick.
I was asked that question today, and this was something I always had talked about in terms of how do you prioritize all these ESG requirements. And I think as an investor, the most important question you can ask a company is, tell me about your safety record. Because a company that has great brochures and everything else, but they don't have that good a safety record, you can't have confidence that what they say in their brochure actually translates to what's on the ground, particularly what's on the ground on the night shift. If a company is actually keeping their employees safe, they are basically seen as a caring organization within that entire sort of immediate stakeholder group, being the employees and the employees' families. They're probably doing environment with some care. They're probably doing biodiversity with some care. So it actually, in terms of you as investors thinking about how do you pick this, you can look at the 1,000-page reported data, or you can ask the company how your safety record doing.
Okay, Tom, but the point really is, I mean, what Mining Journal does with Mining Journal Select, it is showcasing the companies that have those requirements. What you have with the media is you've got the opposite, particularly social media, which gets the stories on atrocities, tragedies, which gives the industry a very bad name. And you get a whole lot of half-educated kids massing in the thousands, complaining about environmental records of which they understand very little, which kind of...
In the mining industry, even in the best of circumstances, we're not the best communicators.
Shocking.
We have to do a better job. We have to do a better job of it, you're right.
Right, so I mean, what you've got to do is you've got to showcase companies, and you've got to have opinion leaders that are telling the world, the media world, what's good. Well, you know, we've got to be positive, otherwise we're actually in our dotage, we're going to be in a world of power cuts and disappointments. But perhaps we'll live long enough for some of these projects to come good.
No, look, I've got to be an optimist about this.
Yeah, be optimist. Are you closing it now?
So I'm closing it.
Oh,
Yes,
okay.
yes, we're closing because I know it's just between us and the next beer. So yeah.
Okay.
So I actually put a list together as I'm reflecting on the presentations, the things that sort of caught my attention.
We got the top three?
I have actually some notable ones here. I didn't just pick three, but I'd say the best presentation overall, and I'd say the best sort of thematic overall, would have been George Gilchrist of Ivanhoe. And the reason for that is, as I said to him, I said, I just saw people being disappointed when Robert couldn't make it here. I mean, I understand that because he's a great entertainer. He's also a great communicator. And people and just think about George getting up to say, how am I going to follow that act? And then having to start on probably not what his strong point is, which is sort of the future world of copper. I thought that he did a fantastic job of basically covering for Robert, but teaching me something about the Ivanhoe projects and the DRC I didn't know about. Because he's an exploration guy. He's a resource guy. And whereas Ivanhoe been successful, including in Mongolia, it's been actually not necessarily painting the future world of copper or air pollution in Beijing, but it's actually delivering that next generation of copper resources for the world. So they have done a fantastic job of actually doing more than anyone else in replacing that Escondido.
I agree with that, Tom. I have an objection. My objection is that Ivanhoe is not working to deliver copper to Europe. Ivanhoe will be delivering that copper to the Chinese.
So from an investor perspective, what Ivanhoe has done, which is my next part of it, because a year ago people said, yeah, it's fine, but it's in the DRC. And I think that you got to give them credit, Ivanhoe, for actually de-risking the project for the investors by bringing the Chinese in as partners. Because if anyone keeps the DRC on an even keel and not repeating the disaster of 20 years ago, it's going to be the Chinese. Now, it means that copper is going to go to China. It's going to be turned into refrigerators in China that are going to be re-exported into the United States and Europe and all that. That's another issue, but it's actually protecting the investors in what will be probably the next Escondido in terms of resources out there. So I think that, in terms of a presentation that of someone that's actually making an impact on the global scene, I would have to give them give them credit for that. And,
Yeah, I agree.
and George had to step into a very unenviable situation of having to.
Absolutely, but I mean, who's building the roads? Who's building the railways? That's how the copper is going to come out of the DRC. It's not going to go the old-fashioned way down to Durban. So the Chinese are ahead of us.
This is, again, we can't be seeing this as sort of adversarial, because if we see it as adversarial, it just keeps getting more and more adversarial.
Well, you were the one that
We've
was
gotta
talking
find the
about, you were
solutions.
talking about zones.
I'm got to be an optimist on these things. So, I guess the other thing, which was more of a, rather than a specific company, I thought was an important one for you as investors, is that the royalty discussion, and again, I'm involved with it from Franco, is that if you want to follow the fortunes of the sector and enjoy the upside while limiting your downside, I actually think the royalty space is a good place for that. And then it's up to you to decide where in the royalty space you pick, but I think it is actually a very legitimate and very attractive part of a broader mining investment portfolio, because it gives you an asymmetric risk curve benefiting to the upside.
Absolutely clear, and it was Wheaton and it was Metalla that were the two winners.
But think about the fact that if
And
you're
Franco.
But you think about from the fact of Asia Pacific and a non-precious metals royalty portfolio, you don't pay the premium to get into it.
Yeah.
So you get all the benefits, but you don't pay the premium. So
Correct.
there's pros and cons. I have to say, I said before, by fair warning, I like the Nevada copper presentation, Nevada copper timing to production, but I would say that. So you can hold that one back. In the hidden gem projects, which I didn't see coming, I would have said Orion Minerals, because I didn't really sort of expect a lot. And the immediate reaction is, oh, it's in South Africa, so I'm nervous about it. But my own personal experience in the Northern Cape was such that, hey, different parts of South Africa are different in terms of investment climate, and being able to leverage existing infrastructure, being able to leverage the existing workings, and go in there with a relatively modest level of capital on relatively good grades, I thought that was a presentation that, again, from a positive perspective, I didn't see coming.
Absolutely, and the other one, which was quite amusing, apart from Friedland not turning up, the other ones that didn't turn up was Mod Resources. But why? Because they got bid for yesterday, and that is an African project, but that's not gone to the Chinese.
So this is a good point, because, and that's going to my next one, because the other one I was impressed with was Endeavour Mining. And again, West Africa, you think, oh my gosh, it's going to be difficult, but they have a very clear strategy. They've had excellent execution, and they've been able to deliver and replicate basically good project delivery in difficult locations, and the investors have had a pretty high level of confidence on that. So even though I'm saying jurisdictional risk is mispriced, if it's been done right, you can actually manage in those environments. And then finally, in the last grouping, Highfield looked good. I mean, potash in the European market, permitted, next to existing infrastructure, good numbers, good jurisdiction, good infrastructure, good names behind the project, and good timetable to production. So these were the ones that sort of struck me as hey, I like them.
So what's next? What's the future? I mean, how do we take this industry forward with new technologies?
I hope that next generation's got some of these answers.
Yeah.
Thank you.
Oh, by the way,